This is your LMAX Exchange technical update for Friday, April 28th, 2017. So one chart that's really interesting right now that doesn't usually get a lot of attention is the sterling CAD chart. That's the pound against the Canadian dollar. The reason why this chart is so interesting is that we've been seeing a bit of a divergence in price action in currency markets over the past several days, where you're seeing the major currencies away from the US dollar and away from the yen, and away from the Swiss franc. I'm talking about the euro and the pound rallying significantly, while at the same time the commodity block currencies have been selling off: Aussie, CAD, Kiwi. And so what this has resulted in is, despite seeing euro and pound strength against the US dollar, the commodity currencies are actually weakening significantly against the US dollar. And as you can imagine, the pound therefore would be appreciating significantly against the commodity block currencies. So one of these markets that's really interesting right now is sterling CAD. This is looking at the weekly chart right here, and you can see that the market's been rallying up over the past several weeks, looking like it could be putting in a bottom, and now coming up into some key resistance, which is actually testing and has already taken out. Because if you look back at the price action, the most recent sort of resistance that goes back to earlier in 2016 into June 2016 through the fall of 2016, there was a lot of a resistance up towards the 76 area, and right now into Friday this week, the market has taken out that resistance just a little bit, breaking up through 76. At the same time, when you look back a little bit further, going back to 2014, there was a lot of support in this area too. So there is a nice level of resistance up in this area, some previous support turn resistance, and this resistance that we had seen back in the fall of 2016 and June of 2016. And so the important point here is really, there are two important points. One is that this sterling CAD chart could be in the process of putting in a major bottom and looking to break out significantly on a medium-term basis. But on a short-term basis, when you look at the price action, and here's the price action on a shorter-term basis, the move that we've seen over the past several days has been so accelerated that it would beg for some form of correction. There is this idea that the market is, shot up quite significantly to the point where it might need to pull back a little bit. And when you look at this using an oscillator, looking at the RSI, the 14-period RSI, it's clearly telling that story, shooting through the roof here. 70 is an overbought reading, and this market is well up above 80, which means it's quite extended. We haven't seen readings like this in quite some time. And so there is this risk running right now that the sterling CAD could see a bit of a pullback before it starts to head higher. Clearly, again, as per the weekly chart, there is evidence here that the market might want to break up significantly, but at the same time, on the daily chart, the market does look like it could be poised at some point over the coming sessions for a correction. Now, if you consider the fundamentals with this analysis, you would say that with the pound, clearly the reduction in risk in the UK over the past several weeks, with the snap election over the past several weeks, as the market sort of gets more accustomed to the Brexit, and then with the snap election in the UK, giving reason for a little bit more comfort in that May will have a more cohesive government. That has all been very sterling supportive. At the same time, on the other side, the Canadian dollar has been concerned about trade, a lot of things going on between Canada and the US, and there's geopolitical risk that Canada is correlated to. And then, of course, we have probably one of the more significant sort of consistent factors is the drop in the price of oil. Now, when you consider everything and then you sort of make the case to the other side, the pound has seen a lot of gains right now, up towards 130, but we do still have this snap election. We do still have EU structural risk as the UK needs to still negotiate, probably a tough negotiation process with the EU, and so we've seen this nice move to the top side, but the pound could be still subjected to downside risk. At the same time, on the other side, the Canadian dollar has been very weak, breaking to fresh 2017 lows at the same time, while the pound is breaking to 2017 highs. Again, another point why we're seeing such a divergence here. But on the other side, oil has pulled back so significantly, and this is a market where there's often demand on dips, that if we see a significant surge in the price of oil, that could be something that starts to get the loonie bid again, the Canadian dollar bid again, which means that it would put pressure on the downside on a short-term basis in sterling CAD. And then another factor that you might want to consider is that, although there has been a lot of sort of stress between the U.S. and Canada on trade this week, with the U.S. talking tariffs, there has been, towards the latter end of the week, more conciliatory talk, and Trump and the U.S. administration talking about staying within NAFTA and negotiating something. So it is looking a little bit more possible that there is this possibility that we could see a pullback in sterling CAD, and it's something that you might want to consider over the short term. So that's something to look at with this chart, and an interesting chart, I think, right now in terms of what the price action is showing. Medium term, certainly the market could be on the verge of breaking out. Short term, we could see a bit of a pullback. So I would say expect a pullback and then look to be buying into a dip. If the market pulls back down towards, I'd say, sees a pullback anywhere, ideally, back into some previous resistance down towards 170 would be probably a good area to sort of consider buying into a dip. But certainly at current levels, at a minimum, it'd be a little bit concerning to be buying sterling CAD with the market so heavily overextended intraday on the daily chart, with the RSI well above 80 right now. So that's the story there. A little bit of a new insight offering this analysis on sterling CAD. Let's get back to the major currencies. Euro dollar. So the euro has also broken out significantly in recent days, breaking to a fresh 2017 high, with the market taking out some key resistance at 109. It has since pulled back a little bit, and there is the possibility that the market is going to want to fill that gap that we had seen on the Monday open, roughly between 107.30 now and the low that we had seen this week around 108.20. So about 100 points of empty space between 107.30 and 108.20, 90 points. So we could fill that gap, but clearly there's been a shift in the structure following this breakout, a potential inverse head and shoulders triggering that could project gains as high as towards the 114 area. And we've seen a sequence of higher lows and higher highs, all suggesting that the euro is putting in a structural shift, is looking to now move to the top side, where we're putting in higher lows now and looking to continue to move higher. So look for the market to maybe possibly come back down to fill this gap, and at the same time start to find some support towards the 107.30 area. So that's the story right now with a euro dollar. Sterling dollar. So cable is also broken out, as we saw earlier with the sterling CAD chart. We can see the performance in the pound, and that's reflected here in this chart against the dollar after the market had put in 2016 in October a plus 30-year low at 118.40. The breakout above 127.75 is a significant development. That's the high that we had seen back in December of 2016, which had defined a multi-week range, and the breakout now suggests that the market could be poised for that next major upside extension, equal in size to what we had seen in the consolidation, which would take us up to about the 135 area. So that's where the pound should be looking over the coming days. Again, the market has moved quite a bit, so there is risk for a pullback. If we do see a pullback in this market, look for it to be supported down by some previous resistance, now turned support in the sort of 125 to 126 area. Dollar yen. Dollar yen has been trading within a downtrend over the past several months, basically since December of 2016. And so this latest rally, while it does look like the market has been impressively bid, and while there is a lot of interest in buying dollar yen down into that dip below 110, at the same time, the chart is still showing a downtrend, and the market could be poised for another move to the downside, putting in a lower top ahead of that next move towards a measured move objective at 107.60 following that consolidation that we had seen earlier this year, the 400-point consolidation that is yet to be tested. At the same time, if the market establishes back above 112.20, that would negate that outlook and take the pressure off the downside. But until then, so long as the market holds below 112.20 on a daily close basis, there is still risk for a topside failure and resumption of declines to fresh lows down towards initially that 107.60 measured move objective.